All right. Hey, everybody. Eric Martin, Keller Williams Classic Group, Sarasota Keys Homes Group, back here with Corey Scott from Harbor One Mortgage. And, we were just discussing the other day that they actually had a Fed meeting, I guess, early last week or late
Yeah.
last week. And some news came out about mortgage rates and how they're going to be affected. So why don't
Yeah.
you let us know what happened there, Corey?
Yeah, definitely. So the Fed had their meeting last week, which everyone was waiting for. Originally, earlier in the year, everyone thought that rates would be coming down. That'd be the first meeting. And unfortunately, with the way the economy is going, inflation's still high. Jobs reports are still coming in way over estimations for unemployment numbers. So the Fed decided to leave rates where they were. But they did indicate that they would be reducing them still on their radar 2 to 3 times this year. So this is like the Fed rate, which isn't directly impact mortgage rates. It's really more like equity lines, car loans, credit cards, things like that. But it's an indicator of the overall economy and the way things will be trending. So as those come down, we expect to see mortgage rates also hopefully come back down in line too.
Okay. All right. Yeah. So, it's going to be like, a pretty much hurry up and wait scenario, I guess.
Yep.
Um, and then anything can change. They may not change at all. They may drop a ton. But for those that are looking to buy a home right now, I know your company offers a down payment assistance program. So, let's say the mortgage rates are still hanging at 7 and they
Yeah.
just barely have enough to make their payments and
Yep.
need help. How would they go
Yeah.
about, getting that program?
Yeah, the down payment assistance that we can use it towards closing costs or down payment. It's an add-on to a regular loan. So you look at conventional or FHA, whatever they qualify, and then it's more strict, right? Because you're getting some free money out of it. So the bond programs want to make sure that the person getting it actually is going to be able to get that back to them down the road. So they would say that like the Florida down payment assistance, it's like a $10,000 assist, right? So you can use that towards down payment, closing cost. The credit scores are 640. And what happens is with a lot of these programs, it's at the end of the loan. Like when you go to refinance or sell it, they pay that money back, right, to the bond program. But it can definitely help clients keep money in their pockets, which is important right now, especially as things are getting tighter. Or use it to closing costs. Like that's a big portion too.
Right. So it's basically like an upfront loan per se. And then as you kind of maybe get on your feet a little bit or get some equity in the home, then you can pull that out and maybe repay that loan then at the
Yeah.
end.
Yeah.
Okay.
Most people that we do this with, like we do this in a bunch of different states, they usually just wait until they refinance the property to a lower rate or sell the property, and it's going to get collected at that point. So it's accounted for in the payoff at that point.
Okay. Yeah. So it's not free money, but it's enough to get you into a home and help you at least get into
Yeah.
that process.
Less money out
So
of pocket may lower your monthly payment. So there's a couple big ones there for sure.
right, right. So, with that, I think that's, a really good program to, especially if interest rates are still going to be hanging out in those high 6, 7s,
Yeah.
and, with the things that are going to be coming on the horizon soon, I think that's going to, possibly be a big asset to some buyers. So that's
Totally.
something really to keep an eye out on and,
Yeah.
look into. So,
Especially here, as we're seeing more houses on the market for longer, I feel like in the Florida market, right? You're seeing more days on market to getting,
yes. Yep.
right? So
Yeah,
they're
we're
definitely
we're
buying more.
averaging now, I think it's like around 50 or 60 days now, depending on the area of, where we're in. But yeah, so, they are definitely hanging around a little bit
Yeah.
longer. And, that contributes to a couple different things. It could be the pricing is just too high. It could be that the interest rates are too high and the buyers just can't, you
Yeah.
know, get the mortgages. I mean, like you see it on your end, the ones that could qualify or not qualify.
Yeah.
So, that puts them
Yeah.
in a lower home bracket or just completely out of the picture at all, but,
So I think to your point
so
on this, though, like that this could be really helpful. Like, but in the last 2 or 3 years, it's been so crazy that we weren't able to use these programs a lot because most sellers, like, we're getting cash offers or crazy or we're asking. Like, as it's becoming more of like a equal market right now between buyers, sellers, it's not quite as seller seller conducive, I guess. The
right.
buyers have more negotiating power, right? Which is awesome to utilize these programs again.
Yes, definitely. Definitely. So now, would that be able to be used with your cash program that you have? That you
To
guys
be
offer?
determined. I'm not sure yet. We haven't previously, but we may be rolling that out. So I'll check
Okay.
with them today. Yeah.
All right. Yeah, because I know that you offer that, so I didn't know if that was going to be a, you know, role. Yeah, because I know you can only use certain programs with
Yep.
certain mortgages and things. So if somebody wanted to look into that, they could definitely
Yep.
reach out to you and then find out more information on that.
Absolutely.
So well, thanks for your time and enjoy the rest of your day. And we will catch you next month.
Cool. Thanks, man. See ya.